Welcome traders to a video from Admiral Markets. My name is Chris and I will be focusing on the chart patterns that are, I think, going to occur after this strong bullish momentum on the majors. Before we take a look at that though, be aware that of this disclaimer. Please visit admiralmarketsglobal.com, select your country of residence and contact an appropriate entity to find out if this video is suitable for you. Also, please note that trading foreign exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Let's kick off with the euro dollar. This is the daily chart and several breaks have happened in the meantime. First, of course, a while back already in December, the breakout above this trend line, but then price stopped at this top. So there were two kind of things that could have happened: a move back to 115 and a bigger ABC correction, or price finds support around 111.50, 119.50 or 119, and there would be a breakout to the upside. We're slightly leaning towards the bounce because of the wave patterns, and we did get the bounce and we did get the break above the tops here. All right, so that was an important thing that happened at the end of last week. Let's dive in here. As you can see, if we put a fib from here to here, you can see 50 fib hit, bang, right there, bounce, and price did not break below it. That was critical, and price broke, actually not only bounced, but then broke this resistance trend line and then broke this top and has hit the minus 61.8 target in the meantime at 123. Considering the strong momentum on the hourly chart, we can see that pretty clearly on almost any time frame. We see that this is probably a wave 1, a 2, this is a wave 3, and price is probably going to make a retracement for wave 4. What I would expect, because price has hit the main targets at the R1 and the minus 61.8 target, is for price to make kind of a bull flag chart pattern, a triangle pattern, some kind of corrective pattern that would appear and then indicate a continuation once that pattern breaks. So let me show you. Basically putting a fib from here to here, probably, because, I mean, assuming that this is indeed the turning spot, it could be. The retracement, I think, could go to the 23 or the 38.6, sorry, 23.6 or 38.2 fib. What could happen is that price moves down and up, then down, then up, then down, then up, then down, like this. And that, of course, is a bull flag, right? So if price then bounces off the 23.6 fib and breaks that bull flag, we are back in the uptrend, or, I mean, we're still in the uptrend, but we're back in a continuation of that trend. And then the target, I think, 124, even up to 125, which is the R2 minus 272 target and the minus 61.8 target. Maybe even extension later on even higher, all right? But step by step. So that's what I'm expecting. I mean, it could go deeper. It could go even down to the 38.2 fib. These two seem the most likely for the moment. I think the 23.6 is the most likely, then the 38. And I would say deepest retracement probably is the 50 and the weekly pivot point and the broken top, right? This purple line indicates the broken top, broken resistance should turn into support. So that is the last kind of level that I would expect to be used for a bounce. And I wouldn't expect it to break below it. If it does, then it doesn't look that bearish anymore. So 23.6 fib is, I think, the likely bouncing spot. And yeah, if price then makes that upside to these targets, those could be big things, the levels to keep an eye on, because that could complete a 5-wave up, and anywhere between 125 and 130, I guess, could be a big resistance zone for price to start a bigger ABC and then again up again. So, but this is, of course, we're talking about a weekly chart, so that's a very long process. So yeah, so for the moment, lots of upside, but don't forget that generally speaking, 125, 130 zone is a level where, an area where price could stop. But with this momentum, I don't think that's the main concern at this moment. I think the main idea is that price will retrace, continue, and make higher highs, higher lows for the moment still, and then that will continue until there's some clear divergence between the tops. All right, this is the pound USD, and basically we are seeing a break and impulse 2. We see a flag, and price broke that flag and is heading towards the R1. This is a pretty hefty resistance zone up in here at from a higher time frame point of view. So I a little bit scared here, or not scared, but I mean like careful of the pound, because it is at a very critical level, I would say. And I would be curious to see how it responds. With the euro dollar, I think it's more likely that there will be a pattern and continuation to the upside. Whereas pound dollar, it seems like it could be a bit difficult area to break. This break was good, and there was definitely space, as we can see. But now, I would like to see how price responds. Is there going to be also kind of a flag? Then there could be a chance of continuation. But if price starts to move down with a lot of bearish momentum, then that could be a little bit of a warning sign that this is the end of the upside. There could be a hook back and a continue and a stronger bearish reversal. So pretty much the same momentum on the pound dollar as the euro dollar. It's just that the pound dollar is, I think, at a more important resistance zone, which could be difficult for price to break. So let's see, and I'm waiting for price to see how price responds to 138 and this R1. All right, so if you're wondering what is this R1, it's a weekly pivot point from Admiral Markets Supreme Edition plugin. A lot of extra features, free to download, and go try it out. And a lot of tools that I think you're going to like. I have the Admiral Keltner pivot points and mini terminal, but there are many, many more. As I said, 60 extra features. Dollar yen, yeah, basically breaking. I think we talked about that in our video last week too, but let me see. The 8th of January. Yeah, anyhow, we had basically a bearish bounce at this trend line and then a bearish break below this trend line. So this wedge was broken to the downside, and price is falling lower. So at this moment, I think that we have still space for a continuation. 110 is a natural round level. Price is getting close to it because it's at 110.66. So I think that the S1 and that round level, and probably some fibs, I would say, at that zone, yes, the 61.8, those are probably going to be bouncing spots. So I think for the moment, the small downside may be likely. Does not look great from a reward to risk point of view. Probably better to wait for price to get at support and maybe try to find if there's any reversal candlestick pattern, bullish candlestick patterns that confirm a turnaround to the upside here. If they do, that could be a bouncing spot for upside again. If price, however, breaks through that zone, then there could be a breakout down to 109 and maybe 108. So that's the key level, I would say, on the dollar yen for the moment. Otherwise, pretty much in a range. As you can see, for this pair to break out, price would need to break above this zone for a bullish breakout, and downside breakout would need to break below this bottom for a push down to 105 and 104. All right, more info, of course, on admiralmarkets.com, where you can also find the Supreme Edition plugin, more webinars, more in analytics, more info about how to start trading, and etc. You can find it all there. Also, our webinars, of course. And above all, wish you good trading. Cheers.